Hello, I'm Darrell Harris, accredited mortgage professional. With rates at historical lows, a lot of consumers these days are asking about 10-year mortgage rates and whether it's a good deal. 10-year mortgage rates can be a gamble, but today I'm going to attempt to show you the numbers to determine whether it's a gamble worth taking for you. 10-year mortgage rates right now are not very competitive in the Canadian marketplace. Major banks have rates from 4.99 to 6.29. I'm going to do my best to explain the difference and show you the numbers on why you'd want to deal with a mortgage broker, especially one with an accredited mortgage professional designation who can help you compare 10-year mortgage rates and what it means to you. With rates as low as 3.89 on 10-year mortgages, I'm sure you'll find mortgage brokers give you a competitive advantage and a huge savings. When it comes to 10-year mortgages right now in Canada, you're gambling. No, you're not in Vegas. You're gambling on your own money. Here's the deal. Currently, 10-year mortgages at a bank are around 4.99 is the best I found, and they will go up to as high as 6.29. So if you right now are taking the best rate that a bank has to offer on a 10-year mortgage, my assumption here, a $200,000 mortgage at 4.99% gives you a monthly payment of $1,066.19. At the end of 10 years, you would still owe $162,383.40. That isn't going to change if you just maintain your regular monthly payments. Now, to give you a comparison on this, if you took a new 5-year mortgage on the same $200,000, current 5-year rate could get at least 3.29, kept the same payment as that 10-year mortgage at 4.99, $1,066.19. At the end of 5 years, you owe $166,053. Now, your mortgage comes up for renewal at that time, and you again have to renew it. And let's say we're going to make the assumption that you renew for another 5 years. So you have now owing $166,053. You're keeping this monthly payment the same. And what I'm doing is comparing the balance of $162,376 to what you owed under this 10-year mortgage at 4.99. So that's $162,383. So those two numbers are very close. What this tells me is the interest rate to get to that balance is 7.45%. So this is where your bet and your gamble comes into play. You're betting that when your mortgage comes up for renewal in 5 years, interest rates will be 7.45% or higher. Historically, that hasn't happened for some time, but that's the bet that you place. So a word of caution there around understanding the numbers. The second scenario I have is a 10-year mortgage rate at 3.99, and we have as low as 3.89 right now, that's offered through a mortgage broker. If I was to do this same calculation, $200,000 mortgage at 3.99, your monthly payment would be $949.91. And at the end of 10 years, you'd owe $157,339. So again, doing an apples to apples comparison, again, the same $200,000. Current 5-year rate is 3.29. We're keeping the payment the same at $949.91. At the end of 5 years, you'd owe $173,621. We carry that balance forward. Again, on renewal, you have to make another 5-year decision so that at the end of 5 years, the next 5 years, you'd owe $157,366. That's very similar to the $157,339 under the 10-year mortgage. The interesting thing on this one is that now you're betting that the 5-year rate will be 4.96 or higher. Again, a huge advantage, a far cry from the 7.45. If I was a betting man, I know which one I'd take, and that's the value of advice from a mortgage broker who's an accredited mortgage professional. I certainly hope that you understand this. Please contact me if you have any questions. Again, if you're considering a 10-year mortgage, talk to a mortgage broker who's an accredited mortgage professional for the best advice and options. It can make a huge difference.